Hi, welcome to the review of round one results. So here we have our teams on a chart plotting the net profit per team. So if we look, we have one team down here that only made a very small amount of net profits, which is not good. And then we have a team over here that made $60 million in net profits, coming in number one. And this is a YYJ. And then number two, we have Barron's Auto at $58 million. So these teams, I would say this, if we had this team in here, Kennedy Automobiles, these three teams had the highest earnings, net profits per team, which is terrific. Shareholders love you. I'm sure your stock prices have done very well. And then we have a pack of people in the middle with around somewhere between 40,000 to 50,000. The high 40s, 50,000, even these low 40s. This is sort of the middle range, which is okay. And then we had a couple laggers that are below 40 million. So if your profits are below 40 million, you did worse on average than the industry. If your profits are above 40 million, you did better than average. So this is what investors look at. So you need to focus on why. When we're doing round two, you need to focus on why is my profits not as high as some of the other companies? What did they do that I didn't do? And you're going to have to do some research in the industry tab on the simulation to see how they built their cars, how they advertised, what was their strategy that was so successful. Okay, moving on to points per team. So remember, the points are a accumulation of a year-over-year change or percentage change. So in a number of financial ratios, many of which we covered in Chapter 3 of the textbook, in addition to some operational measures like forecasting, sales to forecast, you get measured on your overall performance and how you improved from the previous year. So again, this orange company had the least amount of points, only making 143 points of improvement. And again, we have YYJ, which makes sense. They had number one profits, and they have number one points of 1,000 points, and Brandon Auto, which we see here, Brandon Auto was second in profits, and they have second in points. So this is what I was trying to drive home with the financial ratios is if you maximize shareholders' wealth and you improve your profits, then your profit margins will go up, your return on assets, return on equity, earnings per share, revenue per share, book value per share, all these ratios go higher, and you'll see it directly in your points per team. So remember, we're trying to get 2,500 points to get an A in this project. So if you scored, and we have 6 rounds, so you want to score about 425 points a round to get to that 2,500. So most teams are well over those 400 points. And some teams are, almost halfway there with 1,000 points. So you can see, but if you know from the practice rounds, round one or year one is the easiest round to make points in. Now it's going to get difficult as companies start adjusting, becoming more competitive, and as you're having to compete with last year's results, it's going to be a little tougher to repeat your gains of your points in this round. So, okay, let's move on. Let's look at stock price. Okay, again, the two companies with the highest earnings, profits, have the highest stock price. Why is that? And your goal as a financial manager is to maximize shareholders' wealth. So, if you increased your profits more than most companies in your industry, shareholders are going to want to buy your stock, right? Makes sense. And then if you didn't increase your profits, your stock's going to have the smallest gain. And this stock here gained because they've made some money and improved the revenues. But there's a big difference between $9 and the top company's $18. They have double the stock price. So we have a nice range here of stock price showing the different levels of earnings performance for each company. Okay. And if we look at sales per team, we notice that JJ Autos has the number one in sales. So let's just go back here, and where is, as far as points, where is JJ Auto? Here it is, 600 points, and they did moderately okay with profits. So Just because you sell the most cars doesn't mean you're number one company, because it's not about revenues. It's about profits. So JJ Autos did very well in the simulation, and they have number one in sales, but they're not number one in profits or points. But they did okay. I just want to reiterate that it's not bad to have number one in sales, but what's better is number one in profits. I'll give you an example. There are two companies I'm going to give. You have to pick one of two companies I'm going to give to you for free. One company has $5 billion worth of sales, and one company has $1 billion worth of sales. That's all you know. Which of the two companies would you pick? Most people will say, I'll pick the company with $5 billion in sales. But then I reveal that the company with $5 billion in sales has $2 billion of losses. And the company with $1 billion in sales has $500 million of profits. Now that you know that, which of the two companies would you choose? Of course, the lower revenue company that generates the profits. That's the point I'm trying to make here. So, and some companies that had lower profits here, like this company had the lowest profits, but they have not Brandon. Biggest Autos had the lowest amount of profits, but they're still on the higher quadrant of sales. So it's not really about sales, it's more about profits. Okay, so earnings per share per team. So here, this is looking at your earnings and relative to your stock price. So YYJ and Brandon Autos have the highest earnings per share. So you might want to ask, which makes sense because if we go back here, they had the highest net profits. So net profits divided by outstanding shares gives you earnings per share. So these companies had the highest earnings per share. And of course, Biggest Autos had the lowest earnings per share. That's stock price per team, I'm sorry. Sales per team, we want earnings per share. Okay, they're still right, just wrong chart. Earnings per team, earnings per share per team. Biggest has the lowest, and then our two top profits have the best. Okay, that's actually our three top companies have the best earnings per share, which makes sense. But you see a big, you see anywhere from $6 earnings per share down to $2. So it's quite a difference, excuse me, from the biggest company to the smallest company here in earnings per share. And that's what investors really look at. And this is, you can see that most companies had a pretty similar amount of cars sold, pretty much ranging from 7,000 to 8,000, or 9,000 almost in some cases. So, but 1,000 cars at $40,000 a car is a big difference in sales. So that's the graphical representation. Let's take a step back and see what some common mistakes that some companies can make. Now, Biggest Auto is actually empty team that I forced forward. So nobody actually made these decisions. But if we look at the company, we could see that they actually did perform a little bit better than year zero, but they didn't perform that well compared to other competitors. Now this chart, when you're looking at the chart I picked here, is I'm looking at the individual team performance chart. And you go all the way to the bottom, and this market potential versus actual is the most important chart to look at. And you can see here that they only sold 1,500 trucks. They could have sold 2,200 trucks. So all these sales went to another team. And here, luxury could have sold 1,700 cars. The blue bar is what you could have sold. That's your market demand or market potential. And the yellow is your actual sales. So if your sales are actually much below your blue bar, you've given up autos to other companies. Your forecasting was not that good. All right, so going back here, one other thing I want to point out is your gross profit margin. So Biggest Autos is at 31%. You start at 40%. So if your profit margins go backwards, that's not good. So you should be at least 44%. You start at 40%, you should have at least made a 4% improvement in your gross profits. And you can see that these are a percentile rank like SAT. So our top company here, YYJ, did better than 95% of the previous players of the simulation, and that's a pool of 5,000 teams. So you did better than, 4,700 and something teams or 800 teams. You did very well. And here, Biggest Autos only did better than 9% of the players who played 9% of the teams who played this simulation before. But again, keep an eye on your gross profit margins and make sure you get these higher. Now, if we go into Biggest Auto, actually, we were just there. So some mistakes that teams have made this round. Overall, most teams did very well. If you did more than 400 points, you're on track. But some mistakes that some teams made is they didn't focus on their profit margins. They didn't improve them very much. They may have stumbled on their forecasting. They may have under-forecasted their sales. They may have acquired too many assets, or they just may have not, going into my demo game, and this is my demo from round 1 into round 2. And some teams may have had an unexpected deficit, and that happens when you have unsold inventory. So you never got the profits for those cars. That created a deficit. And some teams may have neglected to invest in operational investments. So you see, I made these operational investments last round. So now when I start over my sales page, you'll notice that I have right here, operational cost reductions, $1,500 of operational cost reductions, and that's really good because it helps me to keep my profit margins up by having those cost reductions. I'm just checking. Yep. Okay. So which is very good, helps to keep, because you'll notice that the customer expectations are going higher. So it's getting more expensive to make your cars as good as last round. So if you don't invest in those operational investments, it's harder to keep your profit margins increasing. And remember not to buy more factories than you need, and to go into this industry tab here to check out your competitors and see, how did they do so well last round? How did they configure their cars? What was their market share? The gross profits per car, market potential is the same as market share. And what were their financial results? So here is where you do your research in your industry page. And your assessment page is where you go to see, okay, how did I perform in 1 to 5 stars? What's my performance, my percentile rank, and some hints to do better. So when you're starting the new round, when you're going to go in complete round 2, first thing you want to do is analyze your overview points. And now that we completed chapter 3 of the textbook, you know about financial ratios and you can sort of look into these. Perhaps even do a DuPont analysis. Then you want to look in your assessment tab to see what you did well, what you did before. You're going to read this instructions up here, review your assessment and look at the hints. Then you're going to review your charts and see how you did graphically in your charts. Go into the industry tab and do some corporate espionage, which is not really spying because this is last year's data, and go in and see what other teams had done and what information you can learn about their decisions. Review your financials. This is directly also related to Chapter 3 when we conducted financials. And you can see your cash flow statement. And what you want is you don't want to have a negative cash flow. Hopefully you have a positive cash flow, and hopefully your cash flow operations is positive. Then you go into sales and you start over. You redesign your vehicles. And the key thing here is to make sure your profit margins are going to be higher in round 2 than they were in round 1. So you can go over, if I go to the overview, I see that my gross profit here was 40. I went from 40 to 54% in year 1. So when redesigning my cars for year 2, I have to make sure that I could surpass that percentile. Okay, then you do your marketing, production, and then finally your finance. And in Chapter 4, we'll be talking about pro forma financial statements and how they're calculated. And once you complete your finance, you want to submit your next round, which is due next Wednesday. Okay, so that's my 15-minute wrap-up of those simulation results, and I hope that you've learned enough to put you back on course if you fell off course, or if you're doing very well, to continue to do very well in the simulation. And I look forward to next week when we talk about your next year's results. Okay, thank you and take care.